You just settled $20,000 for $5,000 and you're celebrating. Stop. The IRS thinks you just got a $15,000 bonus and they want their $3,000 check by April 15th. This is the 1099-C tax trap, and if you aren't careful, that debt you thought was gone is about to come back as a massive tax bill.
It feels like a total betrayal. You work so hard to settle your debt only to have the bank report the forgiven amount as income to the IRS. On Reddit, one user said their debt collector told them settling would solve everything, but now they have a $12,000 1099-C and no way to pay the $3,000 the IRS wants. Another person was confused why they got a form for a card they hadn't paid in 5 years.
How much did you settle your debt for? Comment the percentage, like, I paid 40%. I want to see which banks are being the most generous this year.
Here is the deal. According to IRS Topic 431, canceled debt is treated as income because you received a benefit without paying for it. If a bank forgives $600 or more, they are legally required to send you and the IRS a Form 1099-C. The IRS computer matches these forms automatically. If you do not report it, you will likely get a notice in the mail with penalties and interest added on.
But there is a way out that most debt collectors never mention. It is called the Insolvency Exception.
Exactly. This is an IRS Publication 4681. If you were insolvent, meaning your total debts were more than the fair market value of all your assets immediately before the settlement, you might owe zero tax. The IRS even provides an insolvency worksheet to help you prove it. It's not a loophole, it's a legitimate tax rule for people who are underwater.
Poll. Did your debt collector warn you about the 1099-C? A for yes, B for no, or C for they lied and said it wasn't taxable. Comment your letter.
Let's look at a real example. Imagine you settled $10,000 for $4,000. That means $6,000 was canceled. On the day of the settlement, you own a $2,000 car and have $500 in the bank. That's $2,500 in assets. But you still owe $12,000 in total debt, including other cards.
So, if you subtract the $2,500 in assets from the $12,000 in debt, you are insolvent by $9,500.
Right, since your insolvency amount of $9,500 is more than the $6,000 the bank canceled, the entire $6,000 is tax-free. You just saved about $1,300 in taxes. You report this by attaching Form 982 to your tax return and checking box 1B. Without that form, the IRS assumes you owe the full amount.
What about the interest the bank added over the years? Is that taxable too?
Good question. According to Publication 4681, interest and penalties included on the 1099-C might be excludable if that interest would have been deductible if you had actually paid it. This is a bit technical, so check the deductible debt section of the publication. Also, remember that the mortgage forgiveness rules do not apply to credit cards. This is specifically for personal, non-business debt.
One huge mistake people make is thinking that if they didn't sign a settlement agreement, the debt isn't canceled.
That's a myth. If the bank stops trying to collect for 36 months, the IRS considers it a deemed cancellation, and you might get a 1099-C even without a settlement. If you're in a debt settlement program right now, send this to your coach or your friends in the program. You need to save for the tax man, not just the settlement.
To handle this, first, gather a list of everything you owned and owed on the settlement date. Second, fill out the insolvency worksheet in Publication 4681. Third, file Form 982 with your tax return.
I am an educator, not your CPA or tax advisor. This is general information based on IRS publications, not personalized advice. Tax situations vary. Always consult a qualified tax professional about your specific circumstances before making decisions.